should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering, how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
The recent government shutdown didn't just introduce political drama, it removed crucial visibility from the macroeconomic picture. Without data clarity, investors lose their compass. The shutdown also created real economic drag, especially in areas like air traffic, which slowed meaningfully.
The shutdown robbed us of visibility on the macro data, and of course, there's economic hit and there's suffering because air traffic is slowing. So I think for many reasons, I think this shutdown was a problem for investors.
So what about now between, now and the end of the year? It's the AI trade that really seems to be debated. How do you feel about it heading into this final stretch?
I think it's still in really good shape fundamentally. We know there's a lot of visibility for AI spending, and we know there's still innovation and gain of function taking place with the models. So to me, it makes sense that there's still a payoff coming. I think one of the issues that investors are going to grapple with is, even though they may say AI stocks are expensive, Nvidia still only trades at 29 times forward earnings. I mean, it's still cheaper than Costco, so it's hardly a bubble valuation.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about Nvidia. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story's incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich. Using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N=1 company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering, how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
But what was last week about then, do you think, at its heart?
Well, I think at the heart is the market wobbles, and so when the market wobbles, two things. One is they start to take shots at the leaders, right? Because they try to take down the leaders, thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year-end.
Don't you have any concern at all about the level of money that these companies are spending on their build-out, and now the new wrinkle of tapping the debt market rather substantially to help do it?
I mean, Scott, yes and no. I mean, AI is proving to be a scale game. It's not like you and I could start a garage and make a model competitive with OpenAI. We need to have scale and a lot of chips. That's really the model that was required for telecom infrastructure and for energy infrastructure and, of course, for internet infrastructure and even fiber. So it makes sense that a handful of players are really playing a big role. And just like in the energy system, there's 8 majors. Everybody spends money on the 8 majors, and the 8 majors pay a smaller ecosystem. So I think it makes sense that that's what's developing in the U.S., and of course it's leaving other countries in the dust.
Are we back to having Bitcoin correlated with the NASDAQ? If you look at what happened last week, you had $2 billion pulled from Bitcoin. Now the NASDAQ's ripping and Bitcoin's back higher. There was a time where those were highly correlated. NASDAQ went up, Bitcoin went up. NASDAQ went down, Bitcoin did. What about now?
Yeah, I mean, I think that they have a correlation in the sense that monetary liquidity was being drained. As you know, with the shutdown, the Treasury wasn't dispersing money, and the Treasury was building up cash reserves, which was draining liquidity. And now that the government's open, I think liquidity is improving. And of course, we have a monetary policy decision in December. It's going to affect both stocks and crypto because that's a risk-on measure. But as you know, the odds favor a cut, and that cut will help inject confidence. So I think it's another reason to expect stocks and crypto to do well into year-end.
Liquidity, not hype, seems to be the real driver. During the shutdown, Treasury actions drained liquidity, hurting both crypto and tech. Now liquidity is improving, and with odds favoring a December rate cut, Lee believes both stocks and crypto could strengthen into year-end.
Capital Area Planning Group's Malcolm Etheridge. Good to have you both with us. Kevin, I'll hit you first because you're here. Now what? After last week, we shook out some stuff.
Yeah.
Now what?
I actually think, part of the relief that we're feeling today, in addition to the shutdown, is actually related to some of the compression last week that you saw in the high flyers, whether you think of it as the Mag 7 or, the hyperscalers within the S&P, and then a relative catch-up.
Jim Leventhal was making that argument on halftime, and I was somewhat skeptical of that.
Well,
now Tom Lee's bringing it up, and so are you?
Well, I think that, but the positive aspect of this broader, and if you extend it out maybe the past month or the past 2 months, we've been in this broader consolidation, if you want to think about it that way, for the market. What has gotten hit the hardest have been the more highly speculative, non-profitable parts of the market, which have completely outperformed. I'm talking triple-digit percentage points since the April 8th lows. They've definitely outperformed year to date, but they've been the ones that have been shouldering a lot of the blame and have been taking a lot of the hits, especially relative to what we think of as traditional markets like the S&P 500. So I think that when you look at what's been concentrated in terms of selling pressure, actually the overlay to 2021 is pretty similar, where the broader indexes are still doing relatively well. It's just more of the speculative and junkier parts of the market that have been getting hit a lot more. Which admittedly they've had solid runs, but I think that's all else equal a healthier setup because the market is still favoring quality and having a bias towards that.
Malcolm, do you think that the financial mechanics, so to speak, of the shutdown played a bigger role last week than some are willing to admit?
I do not. It probably won't surprise you that I have a little bit more of a contrarian take on this, but I really think this is completely attributable to Sam Altman's comments to Brad Gerstner. I think it's attributable to Sarah Fry's comments about a backstop from the federal government, comments about maybe we won't see an IPO in 2026. I think that investors have been paying very close attention to what OpenAI is doing, even though it's a private company, and extrapolating out how much of the growth that we've been experiencing in the markets the last, call it 6 months, really just since Liberation Day, how much of that growth is directly attributable to one company making all of these big pronouncements, $1.4 trillion in spending expected. And so those comments have obviously been walked back over the weekend. They've tried to put it right, and investors seem to be a little bit more at ease now with what they're seeing from Sam Altman et al. I also think Michael Burry's short on Palantir, which is a widely held retail name. I think also Nvidia is a widely held retail name. I think those two specifically rocked our confidence a little bit as investors, but I definitely think it had a lot more to do with that than it did with anything related to the government shutdown.
That seems reasonable to me, Tom, no?
I mean, yes and no. I'd say investors don't like stocks that go up a lot. They tend to get very nervous, and people want to take profits. But, do I think OpenAI is the only reason the S&P's gone up this year? I mean, that's a real bold proclamation. I mean,
I don't necessarily think that's exactly what Malcolm is suggesting.
No.
But when you have people from that company come out and they're talking about potential backstops and bailouts, it makes people wonder. When you have someone like Burry come out and talk about shorts on stocks like that, it makes people wonder. When Meta comes out and talks about the level of spending that they're doing during their earnings report, and people think about what the end game is, it makes you wonder. All those are real things that were at play.
Yeah, but Scott, just keep in mind a couple of things. One, there's been doubts on AI for the last 3 years. Every time there's a speed bump, someone points to a headline or a story and cites that exact fact, like, is the spending unrealistic? So I would say that that's a consensus statement I've heard time and again. on Michael Burry, he's a well-respected guy that does his homework, and so I do think people pay attention to it. But then again, his track record is not 100%. So I think he might be a sobering voice in the room.
Whose is, Tom? I mean, whose is? Yours isn't. I mean, mine isn't, and no one's is.
Yeah, but then we shouldn't treat his proclamations as if this is destiny. But I think he is raising good points that we should think about. But to tell me that that's the reason stocks go down, again, that's people attributing news to market moves. That's, I'm not sure I actually could answer that. I could say there's a million things affecting stocks, but to me, does Michael Burry change Palantir's growth trajectory? Probably not. Is he making investors wonder if there is the right risk premium? Maybe, but again, markets will resolve that in the next few months.
According to Tom Lee, AI remains structurally strong. Short-term volatility is more psychological than fundamental, and year-end positioning may create a powerful tailwind. While big voices like Michael Burry spark important conversations, Lee emphasizes staying grounded in fundamentals rather than headlines.